Hello, investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you the difference between price and value whenever it comes to stocks. I'm going to show you how to use the difference between price and value in order for you to use options to make consistent income. Now, if you ever wanted to use options to make income, you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you the price of an item versus the value of that item. I'm going to show you how to make money using the difference between these two. And for today's video, we're going to be using none other than a controversial stock, United Health, ticker UNH. So, you guys know how we do it on this channel. We like to get down and dirty with options, meaning I'm going to be doing this live in front of you so you guys could not only be able to follow along, then maybe you guys want to practice this on your individual portfolios. But remember, there's always two requirements I have for my viewers and my subscribers. Quite simple requirements. Number one is going to be always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure to have an exit strategy before entering any options trade. That being said, let's go ahead and start with these option strategies. Now, what we're going to do to get started off, I'm going to go to the advanced feature right here with Robinhood. We're going to go ahead and open that up. Now, we're going to go to the 1 year mark, which is representative of that 1Y. Now, here is the price. The current price of United Health is around $300, 300.90. Now, there are going to be some slight fluctuations because as of making this video, the market is actually open. So let's say it's $300. Okay, let's go to the value. Now, this blue line here, which is one of my favorite indicators, is known as the 200-day moving average. The 200-day moving average gives us the average price of the stock over the last 6 or so months. So, United Health is trading around the $500 range for the last 6 months. Now, once again, the value given to the stock by people buying it and people selling it is in the $500 range. The current price of the stock, however, is in the $300 range. The discrepancy is absolutely huge. So, huge discrepancy between price and value. Now, here's the most important thing. How do we use this information, this huge gap between price and value, in order to make money? Now, before I do that, I want to bring one thing to your attention. So now I'm also going to highlight the difference in value and the difference in price. And for that, we're going to just go ahead down to the actual stock. Now, this is some additional information that Robinhood gives you. Now, the first part here says Robinhood. So this here is what Robinhood traders like me and yourself are doing. And as you can see here, lots of these people have been trading and investing in United Health. Let's go over one more to what hedge funds are doing. Now, hedge funds are doing the absolute same thing. Look at all these buy. The green representative of buy and the red represents sell. So in Q1, there's an 80% buy from the hedge funds. Now, this one is my favorite. This one is going to be what the insiders of the company are doing. Now, as you can see here, the insiders are buying. The reason why this one is my favorite is because the insiders have more information than we do. They're privy to a lot more sensitive information, so they're better able to make a decision. So, as you can see here, they're absolutely gobbling this thing up. Now, if we were to go down just a bit further, I'm going to show you some additional information that Robinhood actually gives you for free. So, the analyst rating right here, 29 analysts said that this is a buy. There's a 72% chance this is a buy. I usually don't go off of that because I know how to do my own due diligence, but it's just there as additional information. The one I actually use is right here, which is the research report. Now, as you can see, the fair value is $473. Once again, I just show you the 200-day moving average, which is around $500. Now, the actually fair value that other companies give for this stock is $473. Once again, the fair value is way higher than the current share price of this stock. So that's why I like how this stock is trading. And that's how we're going to decide which option strategy to use in order to capitalize on this huge discrepancy between the fair value of the stock and also the price. So look at this price here, which is going to be 350. Just remember the 350 price. We're going to be coming back to that later on in this video. Now, here is how you use this discrepancy in order to make money. And for that, let's go back to United Health and let's get our option chain open. So we're going to go to the bottom here and hit trade UNH options, and that opens up our option chain. Now, for those of you that are new to the channel or new to option, this entire area down here is known as the option chain. Now, what the option chain does is that it gives us enough information in order for us to make an informed decision. Now, because there's such a huge gap between the price and the value, this is the option strategy I would be using. So I'm going to go to buy. I'm going to go to call and I'm going to choose the expiration date. The expiration date I'm going to be going with is going to be December 19th. That's going to give me 205 days to expiration. There's a reason why I chose such a long expiration date, and I will tell you why as the video goes along. So let's go ahead with the December 17th. Now, I'm going to go ahead and I'm going to choose my strike price. The strike price I will be going with is going to be, if you haven't guessed it by now, it's going to be the $300 strike price. Why am I going with the $300 strike price? Well, that's quite simple. I just showed you that the current price is around $300. However, the value is a lot higher than the current price. So there's no need for me to be going lower than the $300 strike price because I'm extremely bullish on this stock because the value is way higher than the current price. So I'm going to go with the $300 strike price. Now, with the $300 strike price, I have a delta of around 0.6 right here. I'm going to show you how to make money with the delta shortly. Now, $300 strike price, hopefully you follow me, delta 0.6. We're going to have to pay for this option strategy. The amount we're going to have to pay is going to be $44. Now, $44 is options terminology. In the real world, that's going to translate to $4,400. And that's simply because each option contract contains 100 shares. So you multiply your $44 by 100 shares, and that's going to give you $4,400. So that's what you have to pay in order to get this stock in your portfolio. Now, this option strategy we're using right here is going to be the long call option strategy. The long call option strategy is one of my absolute favorite option strategies out there, and that is one strategy I use to grow my portfolio exponentially over time. Now that you have a long call in your portfolio on this stock, this is what you do. You're gonna do absolutely nothing. That's right. You heard me. You're going to do absolutely nothing. Now, the fact that you're going to do nothing does not mean something is not happening. So let me show you what's happening while you're doing nothing. So current share price, $301. What you're looking to do, you're looking to wait until the share price comes closer to the actual value of the current stock. So once the share price and for $300 comes closer to the $500 for the value, every dollar that goes up between that time, you're gonna be making money. But this is what I am looking for personally. All I'm looking for, I did show you the value is $500, but I'm not looking for all of that. All I'm looking for is for the share price to go to around $350. Remember, I just asked you to remember the $350 price. This is why. I already done my own due diligence. I already did everything and I know my portfolio, my expectations for this stock. So the $300 price is what I'm looking for. Now, once the stock gets to the $350 price, this is how you're going to make money. Remember, you're doing absolutely nothing. All this is going to be happening while you're just waiting in your portfolio with this long call. So once it gets to the $350 price now, you're going to get money based on what's known as capital appreciation, which is going to be your stock increase in price. So the 350 minus the $300 price, that's going to represent a $50 uptick. That $50 uptick is what's known as your capital appreciation or your investment gains. Now remember, I think it's very easy for this share price to get to 350 because I did show you the 6-month trading is around $500. So once it gets to that 350, that $50 is going to be your investment gains. Now, this is the money you're going to be making. You're going to multiply that $50 by 100 shares. Once again, each option contract contains 100 shares. That should net you around $5,000. That is going to be your gross gains. Now, the amount of money you're going to get to keep now is going to be your $5,000 multiplied by your delta. Delta is extremely important when it comes to these option strategies. So you're going to multiply your $5,000 by your 0.6 delta, or rather 60%, and that's going to net you over 50% return. Now, if that is not a good trade, then I don't know what a good trade is. And that is how you use the difference in price, the difference in value, in order to decide what option strategy you're going to use in order to make massive, massive returns. Now, like everything else in life, each strategy, each option comes with risk. So once again, make sure to do your own due diligence before committing to any option strategy, before committing to any stock. Now, if you guys need any help with this long call option strategy, or which stocks gives you this opportunity, then let me know in the comments below. Now, also, I do offer one-on-one coaching. So if you guys need any help with growing a small account portfolio, then that happens to be my specialty. Now, go ahead, like the video, subscribe to the channel. But most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the best thing to do is go ahead and share this video with them. We're trying to help as many as we can get away from that 9 to 5 job. Now, until the next video, keep pushing your investments.